No Bezos, no problem. Amazon's making a return to form, a sharp 180 from a year ago. With earnings on the bottom line back positive, nice big beat on the top line, and margins coming in better than expected as well. Shares are up this afternoon. Let's talk about it with trader Gareth Soloway, he's Chief Market Strategist at InTheMoneyStocks.com. Gareth, are you getting nervous with Amazon's big jump here? Because I know last time you were looking for a pullback at some of these tech companies.
Yeah, and we've gotten a little bit of a pullback. I mean, Microsoft way off the highs following earnings, Netflix the same, and even we saw Qualcomm yesterday dumping out, or today dumping out, as well as PayPal. But right now, earnings after the bell generally are positive. I see Amazon's having a beautiful move, which is giving the markets confidence in the consumer, especially going into tomorrow's jobs report, that I think is a positive for the markets right now.
How do you think this is all going to weigh out for the index? Because to your point, we still have had some languishing activity in some of the early mega cap reports. If Apple comes through and we get these two in the right direction, is there a market preference among the giants?
Yeah, so there's no doubt that Apple's the next one, right? So Amazon's beat, that's check number one. Then you have Apple in about 15 minutes or so, and then tomorrow morning we have the jobs report. If we can get Apple and Amazon to both be up, what it'll do is it'll cushion even a bad jobs number tomorrow, so that the markets may not have a down day. Maybe it's a flat day, or maybe it's still slightly positive. But right now we're seeing the NASDAQ 100 up about 0.5% in the after hours just on Amazon. And I'm looking at some of these others. Coinbase is up, it's off of its highs. Airbnb's down a little bit, but almost unchanged. Cloudflare is rocketing. DraftKings rocketing. Booking Holdings is rocketing. So we're seeing some good price action here in general on stocks, including Amazon, in the after hours on earnings. So today would be definitely a net positive. We'll see what Apple does, though. Apple's the gorilla in the room.
Yeah, like the shout out to a few of the others there, in particular DraftKings was positive instead of negative expectation for their adjusted EPS. The notion of the economy versus the earnings, to come back what you said, if tomorrow's employment is bad, is that hot bad or cool bad now that we got rates trying to move?
That's such a good question. I honestly think the market wants this mid-level number. 150,000 would be just perfect. Not so much that the Right. I mean, the market doesn't want a massive number, because then it puts the Fed hike back on the table for later in maybe the next month or two. On the other side, you don't want to see a recession because of such a bad jobs number be on the horizon as well, which with inflation potentially upticking with oil and gasoline and everything else, that would make it hard for the Fed to ease right now. So I think the market wants that perfect jobs report. You throw that in with good earnings from Apple and Amazon, maybe you got a recipe for a Friday rally. We'll see here.
Okay. If we get that, does it negate the pullback we've had in the last couple sessions here, where technically if you go to the S&P 500, we pulled back from 4,600 basically down to testing the 45, didn't quite get there at the lows this morning. If things do turn around with Apple following Amazon higher, do you think that puts fresh year-to-date highs on the radar, or do we still get this little 100-point range?
Yeah, so I think the markets, as of now, you have to respect the top they've put in. Going back about a week, we had this massive gap up and then reversal candle. Yes. It was called it's called an engulfing reversal candle, and that technically is a real red flag for market participants.
Thursday.
That's right. And so until we take out that high, you have to respect that pivot high. Now, on the other side, we have to also respect that yields are starting to spike, and we've seen what's going on with yield control with the Japanese central bank, as well as some of these other things. And higher yields, remember, the last time we had higher yields in March, that's where we had the bank failures. So I'm very much on this heightened alert. If yields are going to go up and continue up, that's not going to be good for the economy, nor is it good for risk assets.
This is going to be the big test, right? Because it doesn't necessarily have to be that way. That's been our recent history. Yields going up, bad for markets and ultimately bad for the economy. But if we're in this bounce back mode, could we get a couple weeks or maybe yields go up if Apple blows it out of the water?
Yeah, I mean, at least a few days, right? I mean, at least a few days. But the big issue with yields going up, that's why it's so negative, is that we have this house of cards starting at the top from countries all the way down to individuals. Individuals now $1 trillion in debt, in credit card debt. Countries like ours, 32.5 trillion. So that's why higher rates is really a negative, is because it just starts to suck up all that disposable income in terms of interest payments. And again, we're even talking from the small individual investor all the way to countries like the U.S. or Japan, where you have debt to GDP in Japan at 250%. It's nuts.
Okay, so still the potential here of that macro headwind could even limit maybe what good Apple could bring if the numbers are solid. Amazon decent, more than decent, I think. Coinbase up too. A lot of these moving in the right direction. What do you think is the most important thing as we look for Apple coming up? Is it just a top-line surprise like we got for Amazon? Maybe they could pull off positive instead of that slight contraction on revenue?
Yeah, so for me, the biggest thing I'm watching is those iPhone sales, because what we saw from Taiwan Semi a couple weeks ago, their AI chips were selling, their phone chips were not, their computer chips were not. And if you look at Qualcomm yesterday, the same issues, right? So for me, this is a warning sign, but I wonder, has the market already kind of come to terms that the iPhone sales may be light? And again, we'll see what that price action reaction is. That's really what I'm looking forward here is to see how realistic the Taiwan Semi issue and Qualcomm issue is for Apple.
All right. Anything stand out to you as tradable yet, or we still need to get those other pieces of the puzzle in place?
Yeah, I mean, I was watching Coinbase. Coinbase had that double top around, I think it was 106 or so. It got to 101 and change, and then has reversed here a little bit. So I think that's something I'm going to keep an eye on. I'm very curious in the conference call for Coinbase what updates they give on the SEC and this lawsuit there. Is there any clarity for us in terms of analysis-wise? And then really, again, Block is starting to downtick on earnings a little bit, not much yet. But Airbnb is now back to the flat line after hours. That was kind of a big one for me because I've heard a lot of rumblings that Airbnbs are not selling out like they were, and that could potentially a warning sign for the economy. But those earnings, as of now, seem to be okay as well.
All right. Gareth, thanks a lot. Great to have you here. Fun afternoon. Appreciate the heads up on what you're doing. I'll let you get back to the trade.
Thanks so much, buddy. Take care.
You got it. Gareth Soloway, InTheMoneyStocks.com.